Good evening, everyone. Time for another silver update. This is the 1 hour chart of silver provided by netdania.com. You can click on the link below. Now, I have been documenting this type of saucer or maybe even flying saucer formation that we've had here. We've had a dramatic change with the price drop that we had with the unemployment number. We're going to be getting into that in a little bit. And you can see we took out this significant support trend line. This is something similar to what we saw with the September smackdown that occurred a year earlier, and we had a tremendous price break. Is that possible? Yes, it is possible. Now, I think the latest Clive Mond, he had done an article before that breakdown in September. I had done a video on that and recommended people look at some of the AGQ puts if that's what they're interested in playing as far as paper. I think we're coming on a possible scenario like that. Maybe not. We might just get a bounce right off of here, but we could also get a quick drop down to here or even down to here. If that's the case, that's going to be fantastic for silver stackers. They're going to get a chance to buy more cheaply, and it might also be an opportunity for the paper players. So let's look at, before we get to the questions of the night, let's look at the AGQ now. If you remember, the AGQ is ProShares Ultra Silver. This is an ETF. I've spent quite a bit of time covering the ETFs. If you have followed my commentaries about the ETFs, you have to understand that these are constantly decaying instruments. The opposite of this would be the ZSL, and that's going to be the ultra short silver, and the ZSL has had to split 4 and 5 splits multiple times, and you can see why. Even though these seem to be a mirror image of each other, there really is a trend of constant decay. So on this time frame here, you can see that the AGQ is only up just barely 10%, while the ZSL is down 50-something%. Has had to split just to keep the price up. So the point being that if you're going to play the ETFs, you have to play them from the short side because they have that built-in decay. If you any of the ETFs are not a buy and hold type of instrument, even though they may be promoted by some of the ads as being such. So let's go over and look at the options on the AGQ. I'm just going to do a pick for the potential of downdraft if it does come. The October month expiry is going to be, I believe, it's not listed here, but October 12th. This says, here it is, they expire at the close on October 19th, so that's going to be only 2 weeks out. That's going to be a little bit too close. If you're expecting a significant drop quickly, then you may want to play the nearby month. The one I'm looking at here is the 56. You can see the 56 is at $1.40 right now. If we go out to November, which gives you about a month more, then the 56 is going to be at 310. So that's going to take for you to be in the money on that, you're going to have to get a price of 53 on the AGQ by that date in November, which is November 16th. That's after the election. So that's probably going to be my favorite, would be the AGQ 56 November put at 3. And if we go back to the chart, you can see the type of move that we need to have to get that into the money. It's not going to be a very big move required. if we pull up the 5-day, you can see that on Friday we had a move down of 1.67. So we've dropped from 60 all the way down. We bounced off of 57.5. So a move to 53 if we do get any kind of dramatic sell-off, and that's the way silver tends to run, is slow accumulation and build up and then dramatic sell-off. So that would be the one, if I were to play it, that I would be playing. Again, I don't give investment advice. Now let's go to the questions of the night. The first one is from Tyonker. And dear Brother John, I've enjoyed your posts and videos for some time. You do a great job of informing people about the tremendous money form we all aspire to own. I've been in the market since '05 and held my physical through thick and thin. Not so much did I enjoy owning some silver juniors, and have left that for those much more able than myself to pick winners amongst the miners. I did do a small amount of COMEX silver trading and surprisingly did okay, but with hindsight I'm quite aware that I made money through blind luck only. I have made mention before about the volume particulars on Netdania. I think they're providing an estimate in ounces, not in contracts. Now he may be right on that. Your latest video on the subject contains the reason for my quibble. You say that all-time high volumes on the COMEX were in the 1 billion ounce range. If that is true, then volumes quoted by Netdania must be in ounces, or multiples would be too high. In other words, a volume day of 200,000 shown on Netdania would translate to 1 billion on many days. I have sent requests to them to try to determine this, but I get unclear responses. In any case, your point about the ridiculous number of paper ounces traded versus real can't help but be valid. Changing gears, I would like to tell you that I've seen firsthand how unusually large contangos have led to very large price declines. In the natural gas futures in '08, when they were decimated by, guess who, JP Morgan, the contango had risen to unheard of heights. Because I'm in the natural gas business, I watch the prices on the COMEX, don't trade. The speed with which they took down natural gas was quite a thing to behold. They gutted a hedge fund named Amaranth and never had to answer for it. It has not even come close to getting off the floor since then. Surprisingly, not very much was made of the drubbing in the industry, except, as Phil Lack of Poker fame says, take the years of pain. Unlike the silver market, the obvious blatant control of natural gas has a huge current effect on the economy. Unlike the silver market, the supply of natural gas is way ahead of the current weak demand for it. In any event, the articles coming out against the manipulations in markets make me laugh. I think we're a witness to a new group of robber barons who would do the old ones proud. To assert that markets are free and fair means the person saying that is misinformed or willfully dishonest. I don't care if you trade stocks, pork bellies, interest rates, precious metals, energies, the markets are dominated by huge interests, no question. And I would have to agree on that. First of all, on the issue of Netdania, I think he's probably right, but I do think that they do actually trade in some, if you added it all together, as much as 1 billion ounces a day. If you added all the ETFs, all the COMEX contracts, the LBMA, and all that stuff together, you could actually see as much as 1 billion ounces trade a day in paper. Now, are the markets rigged? Yes, the markets are completely and totally rigged. In the past, you were trading against other people. You were trading against fundamental views that differed from yours, and you were trading, of course, against the volume power of other traders. Pretty much now you're front-running the government, because it's the government behind the manipulation of all these markets. So it's still a market. It's still a casino where you can bet and try to make a gain, but you have to recognize that the other side of the trade might often be the government. So that might not be in your interest. It might be much more in your interest to just try to stack physical silver. And the next question: why do governments produce silver coins? This is from Eyeball. Hello, Brother John. My question is, why do the major government powers produce silver coinage? If silver is the dagger in the central bankers' hearts, why would they want us to buy silver? This makes no sense to me unless they think the average American is unable and devoid of rational thought. Well, that's a really good question. You have to remember with the Silver Eagle that it was actually the efforts of Ron Paul and others in the 80s during a very conservative swing in government that caused the law to be passed that created the gold and silver eagle. So that was sort of a libertarian bent that brought that on. I guess if we look at it from a more sinister viewpoint, why would the bankers want us to buy silver? Well, probably that we're going to buy silver anyway, and that why shouldn't the government get their cut? And I guess the most sinister would be that if they're going to keep track of all the gold and silver that's out there, what better way would there be than to actually produce it and sell it themselves? And finally, silver will give you a cheap thrill. This is a recent quote from Jim Sinclair. This is by Finger Foods. Dear Brother John, thank you for all of your insights. I very much appreciate them. I've copied below a short post from Jim Sinclair from yesterday. Was interested in his comment at the end. I was hoping you might offer your thoughts on what he means. Thanks very much. October 5th, Jim Sinclair. My dear friends, today's employment figure is a shock. A shock not because they are good, but rather because the fabrication is totally transparent. On the other hand, is the candidate of Wall Street and the bankers. There's no choice here between good and bad, capable or incapable. No matter who wins, the transition to a one world central bank and single currency is unavoidable. Both parties are experts on the art and science of stealing an election. Who knows, that might cancel itself out. If I was a young married man, I would not have children. I would not want them to have to live through the end game of all this transitioning into the new world of Big Brother's matrix. I've given you the end game financially, which is the Federal Reserve's balance sheet's impacts on dollar confidence. I know what the new world will look like, and making me totally delighted to be 71. Gold will protect you in this transition. Silver will give you a cheap thrill followed by a spiritual experience devoid of a teacher. Respectfully, Jim. A very interesting comment. I think if you add together the other statements that Jim Sinclair has made here, it seems that he falls into the FOFOA camp, that he believes that the central bankers will succeed in creating their one world central bank this time around and single currency. And if you believe that, that is probably the reason why you would stand on the side of free gold and not be very in favor of silver. I, on the other hand, don't think, I tend towards the other side. I don't think they're going to succeed. I think we're actually going to see decentralization. And I think that silver is going to do much better. I think that the next reserve currency is going to be the Chinese yuan, and that will be probably backed by gold and silver and other commodities. Not really sure how it's going to play out, but if I'm going to take the bet, I'll take the bet that the powers that be fail this time around to get their single one world currency with one world central bank. But it makes sense that Jim would make this statement if that's what he believes, because silver isn't going to be their money. Gold will be their money, and that's just going to be if you come from that free gold type of point of view, and that's what I think he's getting at. Now, the other point here, and that's going to be the topic of the night, is his statement about the unemployment number, and it really was a transparent fabrication. This number was the largest number that they've released in 30 years, and it was conveniently 4 weeks before the election, where another number won't be released. It brought us down to 7.8, which was the number that Obama had when he came into office. So even if that's accurate, which it's obviously not, but even if it is, it's still no progress at all. But I wanted to look at some charts that will give you the truth about the economic picture a lot more than that chart will. And the first one I want to look at, this is the labor force participation rate, and this is in a percentage of the population. Now you can see here, they start in January, that Obama came into office right in this area, and the labor force participation rate was about 65.75%. We're now down to about 63.5%. You can see a little minor uptick there, but the trend is consistently down. So this is going to be the big number. This is an important number because this is the number of workers. This is not some phony household survey. This is not some rigged by the way, the BLS, the Bureau of Lying Statisticians. This is not some number where they roll them off after they've stopped looking for work. This is just a simple raw number of what percentage of the population is working, and that number is going to feed directly into the amount of money that the government is taking in federal receipts. This is a chart of federal receipts by source. You can see that payroll taxes and individual income taxes, they're charted here. Payroll taxes actually had quite a growth curve there and then kind of leveled off, but we can see and we don't have the latest figures for 2011, but they're not good. We can see that since Obama took office, we've been in a steady downtrend in individual income tax receipts and also in payroll tax receipts. So again, that is not indicative of any type of recovery, but a steady decline in tax receipts. The last chart, of course, this one's from Zero Hedge, and this is the number of Americans on food stamps. You can see Obama took office roughly in this area where we had about 33 million Americans on food stamps. We've just recently set a record here. You can see we've just peaked above 46 million. So this is a steady gain. It is starting to level off, but it may start to rise rapidly again. So absolutely no improvement during the Obama administration of food stamps. Clearly, the situation is growing worse. There again, to reiterate, there's no improvement in federal tax receipts, and you see the same thing when you look at state, especially with California and others. No improvement there in that number, and the last number was the one that we covered first, and that is the BLS percentage, and there's just no improvement there. So there's no improvement across the board, and it's really almost pathetic, the type of number that the administration came out with to get some kind of boost. And of course, that was after the complete just drubbing that Obama took in the first debate. He was absolutely destroyed. Now, the one thing that many of the liberals have had going for them in supporting Obama is that he's supposedly a very learned scholar. Of course, I wouldn't know because I've never been able to read anything he's ever written, because everything he's ever written and everything he's ever done is sealed. So it's impossible to vet someone like that. But the one thing that he had going for him was this left-wing intellectual snobbery that you always find on the left. But Romney quickly dispatched with that because Obama didn't have his talking points, he didn't have his teleprompter, and he was absolutely obliterated in that debate. So that may be the reason why they had to come out with the phony employment number to do some sort of repair for the campaign, but clearly that was one of the most fraudulent economic numbers we've seen in a long time. So are we going to roll over? We may roll over, and you may get a chance to buy silver on the cheap. That's why I wanted to look at some issues. First of all, I wanted to cover the new 2013 koala. That's going to be coming out on November 5th, 2012. And this is the next in the series of the koalas. If you've noticed, the 2012 koala seem to have the similar sort of look. They're going to more of a rough look. I think it's probably a more realistic look as far as the koala itself. The question is going to be, is that going to be popular with investors? I don't know the answer to that. I prefer the older ones. I'm glad I've got them. They were very low issue, and they seem to be demanding very high premiums. Now, if we look at a couple of ones I'm watching the antelope here, you can see that it's 37.83, and that's not a lot above current spot. $3 to $4 above current spot, and you can see they have about 2,500 of those. The other one I wanted to look at is the 2013 Kookaburra, which has just come out, and I wanted to cover that pattern or style that they've gone with and get your take on what you think. This is kind of a regression as far as the artistic style, at least in my opinion. It's more like the earlier Kookaburras and less like the most recent ones. This reminds me of the ones that came out about 10 years ago or so. So that's the latest, the 2013 Kookaburra. Again, it's going to be out in November. I'm starting to warm up to this coin. It looks like a fairly nice design, and you can see it has a pretty high premium here. It's actually about $1 cheaper over on Gainesville, so you might want to pop over there. They have about 2,000 here, but you can pick them up for about $1 cheaper over at Gainesville Coins. This might be one that you want to look at, as well as that Antelope series, if we get that big drop down that some are expecting, and this chart seems to possibly be forecasting. Again, if that happens, if you're a paper player, the one that I'm looking at is the AGQ 56 put, and that's November 56 strike, the November date expiration, and that's running right now about $3. So we'll cover that moving forward as we watch what happens to the price of silver, and we'll talk to you next time.